All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. I hope everybody's having a great trading session. And let me grab my bias chart here. Couple comments that Cliff bought the pound dollar and sold the euro pound. Eek. I hope you're not getting too crushed in those. James says, good morning, fat man, Batman, Blake, fat Batman. Good morning, Cliff. Or I mean, James. Um, James says, and the Aussie yen, or the the U.S. dollar, Japanese yen to bounce too, please, and the Aussie, New Zealand. Yes, need them both to bounce. It would be nice. Jack said, Polly, maybe it's the euro leading the Swissy, and Andrew said, oh my God, Swiss National Bank, huge news. Insert fart noise here. Yeah, not a whole lot happening. Nick asks, hey Blake, could you have a look at the Mexican peso, please, for a possible major retrace top level? I already took a third off this morning. I reloaded double what I took off the dip to 1925, and I'm holding. Yeah, I'm going to look at the peso in just a little bit, but I think I covered a lot of that before I left. Just, you have to watch S&Ps. I really, really believe that. The S&P does look weak, and the S&P looks vulnerable. And if the S&P continues to look vulnerable, then, wow, the pound looks really vulnerable here. Speaking of vulnerable, the S&P continues to look vulnerable, then, we might have a situation where the U.S. dollar Mexican peso continues to rip higher. I really, 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 really want to short the U.S. dollar Mexican peso, but not until after it reaches 20. From 20 to 21, that's where my sights are set, but I'm really not looking to do that until later on this fall, because I'm going to look to take advantage of the end of year rally, the seasonal type of trade. But like I said, between now and then, the peso looks dangerous. I mean, it might top near term, maybe for a day, maybe for a couple of days, but man, the trend is higher, and it keeps stabbing higher too. All right, let's go into the chart. Man, this cable looks weak. This cable looks like it's going to take out the lows, frankly. It does. Matter of fact, you know what I need to look at, because I'm long? Pound New Zealand. It's come off quite a bit. Look at this thing. Whoop. All right. Let's find some support here. All right, starting tracing right now. We might find support. Thank you very much. Great. It's still off about 8 cuts. Let's see if we could get to 181, but we will see. All right, let's go to the euro dollar. So euro dollar is really easy today for you. Okay. Same as yesterday. Really? Brian says, "Is it me or is your mic all messed up?" I don't know. I think I sound okay. Do I not sound okay? Wow, the pound's just getting crushed right now. Whoop. Sounds weird. Dotto said I had some issues. Oh, I have issues. What kind of issues are we talking about right now? Sound was sound was bad. Now it's all better. Hold on, let me see something. Hold on. This euro pound is. Sold some euro pound at 85.20. Stand by. Did I just lose data? Can you guys hear me? Test, test, test. Yeah, it sounds like my connection's bad. Test, test, test. Test, test. Test is all right. Man, this euro pound's ripping. Hold on. Pound's getting killed. Um, yeah, it seems to be okay right now. I think I had a bit of a hiccup there, internet wise, because my trading stations hiccuped too. So okay, let me know if it continues to get worse. Because if it does, I'll have Paul take over, and I'll reset my router, which sometimes does need to happen, from time to time. Okay. Anyway, um, no, if you guys are having sound issues, it was actually I think it was on my end. I really do. Okay. Anyway, let's go over to the euro dollar. So let's make this real simple for us today. So the euro, continuing on yesterday's analysis. Okay. Hey, Paul, is Paul there? Paul Franco? See if Paul's still around.
Hey Blake, what's up?
Hey, man, can you take over for about 5 minutes? I'm going to unplug my router and come back. Everybody says
Okay, hang on.
my internet's kind of jacked right now, so I'm gonna try to reboot my router really fast.
Hang on for a real quick second.
My router needs to be redone. So you guys just bear with me. Paul will take over for a couple minutes. Sorry, dude, to do that to you.
Okay, no problem. Hang on. Huh. Well, let's see.
Yeah, it's coming over. Let me see. I'll let you know when I can see your screen.
Hold on. So, going back to screen. Hold on. There.
Yeah, guys, it's not your issue, it's my issue. That's why. Okay, Paul, just give me I'll literally about 3 or 4 minutes.
Okay.
I'll be right back.
Okay, guys, we're going to go back to the S&Ps. If you remember, we were covering the S&Ps before Blake came on, and I was telling you about we had some pretty good resistance at 22, and I was showing you on the footprint, uh, and I said, we're probably going to go and see a move back below 20, and we got that, obviously. We've come into support here at 1750, so we'll go back just to cover that real quickly. We had looked here, and here's on the 2-hour chart. So I said, hey, look, we're coming into a very good level right here. You can see all the different touches, which is the way I do my levels. I know there's some listeners now that they don't listen to the European crossover and listen to Blake's show. I don't put my levels on the high and low. I always say, how many people actually sold the high and how many people bought the low? Not many. So what I do is I go by the touches. So sometimes you'll see my color zones and stuff I'm trying to do a zone. So what we're looking at this morning, and it's actually, for those that are seeing now that the crude came off, the reason the crude came off because the crude was taking advantage of the SPOOs rally, because we had a very nice rally from 07 3/4. So when we came up here, I was like, you know what, we're in a very good area. You can see here on the 2-hour chart, but it's a little bit more pronounced, I believe, on the 15-minute chart. And we'll go back in here. to pull that out. And you can see this kind of unfold better. And you can see here where you see the crux of the touches. Here's where I came in with the 22. You see on the way down, you get a rally back up here at 22. And you can see then you see a very good battle right here in this area for the market, right in here at 22. The market's trying to decide. It's battling back and forth. But you can see that this is basically the line of scrimmage if you're looking from a football analogy. So, we're really duking it out right in here. The forces are pushing back and forth. So you can see, the one thing about the S&Ps, they never forget the levels. The same thing with FX, but in the S&Ps, they never forget the levels. We're looking at the December futures, but when I'm looking at the 2-hour chart, I just go with the continuous chart. Because, you know what? They never forget the levels. It doesn't matter if we rolled over to December from September, September from June. The levels stay the same. That's just the way it is. So, obviously we're looking at the December S&Ps right here, but you can see here is that when we come back up in here to this 22, we had this very nice rally, and I was telling you this morning, hey, we're actually on a short-term basis, and even though this is a 15-minute chart, I use my 30-minute EMAs. So even though we're on a short-term basis, we did get this, buy signal right in here. So the market pushes up, and we're looking here at the 22, and I was stating here is that, hey, look, we've got some very nice resistance. It even tried to push up here because we were looking at 22.5, and if it's even pushing at 22.75. But I said, hey, look, it looks like it's going to have to pull back. Going to go and get a respite, a pullback below 20. We actually went even further than I thought, but look where they found support, which we already have marked up, 1750. You see what I'm saying? I don't think it's as much as it's coming into the slower exponential moving average. Is it the best way to look at it is if you see a nice setup, which I think we had a nice setup above 22, you have to say, okay, where's the target? Where are they going to go to? And the 1750 made the most sense because you can see all the touches. And I don't do volume analysis, but obviously this is coinciding with there's a lot of volume. So you can see where the market finds support right here at 17.5. And I'm not saying you have to buy it there, although we are on a short-term buy signal. But this move up here set up a very nice short. We talked about this also this morning. In the dollar CAD, we may have a very nice short setup, and he moves to above 32.18 if you're thinking, hey, look, this thing's way overdone. I think we've got a bottom in crude. Then fine, you could go and look at the dollar CAD for a short setup. But I wanted to go in and just give an update to where we stood here on the S&Ps. So we'll move back here into what we can do is let's go and take a look at the bond market because I've only got back, recently just started jumping back into trading the SPOOs again. And the reason is because the bond market has just been, a wonderful marker for where we're going to in the SPOOs. And I actually have used that several times to go in and buy actually where the bond market was coming into key area the other day. And bought the SPOOs and was able to go and grab like a quick 5.5 handles on that market. And
hey, Paul, just I'm back. And once you're done with that, I'll take over. Sorry about that.
Okay, great. Oh, so that was your point out here in the bond market. Yeah. You can see here that one of the things that was a little bit concerning with the SPOOs, and I was surprised to see the SPOOs drip down to 07 3/4, was that the bond market, even though we got here to the 23% and we started to slide back, it's been a very gradual slide. And but the SPOOs continue to go on and give up. I think it has a lot to do with what's been happening in the emerging markets. And we've been saying that for more than over 3 weeks ago. It's gonna. I think of Morgan Stanley, whoever was saying, and I know Goldman Sachs was long EM. I know what's his name from BlackRock was long EM. Now they had done well, but they were like, oh, everything's still good. Everything's still good in the hood. Any issues with the U.S. bonds? Yeah, not going to make a difference. Yeah, right. It's always different this time. And I said that a little over a week and a half ago. It's not going to be any different. These U.S. rates falling here are going to have an impact on the emerging markets. And I just saw on Reuters, for the 5th day in a row, the emerging markets have been down. Also, seen
that's why I think you got to watch this. I think you got to watch equities here, and I think you got to watch the peso and the rand, and if they continue to look weak. You know?
No, you're spot on there. I heard that the emerging market currencies are really getting whacked. I saw a story in Reuters. They were saying, "Hey, the problem is that once these CTAs flip the switch, which is exactly what they said. Once they flip the switch, the weakness goes for days and days. Well, the emerging markets are down for the fifth day in a row, so we might see a little bit of a bounce back in the SPOOs. That we got this nice double bottom in Asia, and we saw a beautiful rally. You know what? I was like, I'm so stupid beyond stupid. I saw this here, and I got greedy, and I was trying to short it at 13. I decided to move it to 14, and it stopped right there at 12. And I told people yesterday, and that's why I got short in the S&Ps. I go, don't get short. Wait for them to get to 66.12, and then you can short the S&Ps. And I'll be doggone. As soon as we got here to 12, the S&Ps got that level. They got up a little bit higher, and then was south of the border for the S&Ps. Overall, for the day, I just grabbed just a little bit. But this bond market has been a beautiful market. But
All right.
that's all that I got. Take over.
All right. Thanks, Paul. I appreciate it. Sorry about that, and I think the audio should be a lot better. I just rebooted my router. Thank you so much. I'll catch you a little bit later, man.
Okay.
All right. Perfect. All right, traders. We're going to cruise through this analysis. Like I said, I had to reboot my router. I think the sound should be better. Let me know if we have any issues moving forward. Okay, so the euro dollar, real quick analysis, down and dirty. So 112. See this falling trend line? So this falling trend line, as I moved it over, and yesterday we were at 113. Today we're at like 112.85. So that's our support and resistance for the euro, and the resistance is 112.85, and we're range bound. Hopefully this data that we get today will push us out of this range. That's what I'm hoping for today. I'm hoping that today we can press out of the range. Now let's go over to the pound. So the pound started to finally feel some weakness following the Bank of England. We actually hit new lows for the day, very brief, but we did. We hit new lows on the session. Now I just shorted some euro pound right here at 85.20, just to let you guys know. If you guys missed that earlier, if I sounded like a little bit of a robot. We had a 618 here, so we should find support down here. I'm going to actually write today's low and 131.35, so 131.35 and 131.85 as support levels. 131.35, 131.85. That'll be support. Resistance obviously is key. Here, let me get rid of this. By the way, our head and shoulder pattern for the cable completed for the most part. I mean, you can when you're off like just by a couple of pips here, that basically means completed, because you have so many people that are playing into this pattern that you stop. A lot of times you stop short of these patterns. So now resistance is that neckline. This is key, and guys, if you're trading the cable, when or if it breaks 132.80, that's what's going to release the upside here in the pound. Okay, 132.80. Right now, the risk is that we continue lower here into this range. That's the risk. I mean, you look at the pound at the moment. You look at the way it's trading. This is a big rejection. The risk is that we continue to move lower. We have to get above 132.80 to release this downside pressure. It is downside pressure. 132.80, right? Okay. Let's go over to the Swissy. Okay, so here's the Swissy. Nothing happened last night. Swiss National Bank. Somebody was saying yesterday that, oh, they got these, I hear that they're going to do something big. Yeah, boy, that rumor mill really suckered a lot of people into the market yesterday. Nothing. Okay, nothing at the moment. But what we've got is this tightening range, just like the euro dollar. We have a tightening range of the Swissy, right? Same thing, different pair. Support at 97. Resistance really is here. I mean, it truly is right there. 97 and 97.85. Oops. 97, 97.85 range. But I'll tell you guys, I'm hoping today is going to be the day that busts us out of these ranges. Here, you know what? Let me get rid of that. Let me get rid of that. Let me get rid of that. Let me make it a different color. I'm hoping today is what breaks us out of this range. Okay, but you can see it's a tight consolidation, and you know, setting up. Does it sound still bad, you guys? Sounds still bad? Everybody says the sound is fine. Okay, all right, good, all right. Was gonna have to reboot my router again, but it's all right. Everybody else, most, I would say 99% of people say it's okay. Okay, that's good. All right, so there's the Swissy. Let's go over to the, where am I at? Yen. So I've got a long in the dollar yen. I'm long at 102.66. Now, I'm very well aware, and I'm not getting aggressive until we break above 103.35 and 104.30. At those point in times, I can be a little bit more aggressive. Did you guys read the blog from yesterday? Did you guys read this? Is the US dollar Japanese yen at risk of a rally? If you did not, I'm going to put it in the chat box so you guys can read it. So you have really my longer term view, or my bigger view of the dollar yen. Remember, I've been a dollar yen bear for, some of you have been listening here for 6 months. You probably haven't even heard a day in the last 6 months that I've been bullish the dollar yen. At least 6 months, 10 months. Actually, you know, if you go back to here, when I was looking for the head and shoulder pattern back here, I would say that over the last 12 months, you have not heard me say, maybe once or twice intraday for like a bounce, you have not heard me say I'm bullish the dollar yen. If you've been listening here in this webinar for the last year, you probably have said, oh, Blake bearish the dollar yen, Blake's bearish the dollar yen. Oh, Blake's got, you know, his bias chart, it says bearish the dollar yen. Look, I've been bearish the dollar yen for I cannot tell you how long. I think a year, all right, at least. And I'm now starting to turn kind of bullish. Does that say something to you? It should. You know? Does that say something to you? It might. Okay? So just keep that in mind. I'm actually starting to change my tune. Why? Go read the blog if you want to know the whole reason why. Now, one thing that I will tell you is that stocks have been going down. Dollar yen has not been going down. And that is interesting. I mean, yes, yesterday it did, but, you know, we had this nice little almost gravestone doji. But the dollar yen's been holding up pretty damn well, and that should be respected. All right. Now, we have a lot of work to do to really turn bullish here, but it's attempting to turn bullish. I would say we're looking at something that looks like this at the moment. Okay, something looks like that. Now what that probably means is we can still sell off from where we're currently at. This is an hourly. We can probably get down to 101.80 without much of an issue. Okay, we're at 102. I'm not ignorant to the fact. All right. Permy, go read my blog, please, before you start asking me questions. I'll answer a lot of questions for you. Okay, I hate saying things 2 times. let alone 3 times. Okay, it's one thing that irritates me. It's like I don't have enough time in my day. I need like an extra 3 hours in my day just to complete the normal stuff that I need to get done. And therefore, if I have to say things over and over and over again, there's nothing more that will frustrate me. Very short tolerance for that. Very. Okay, 101.80 I think is going to be pretty key support today. All right, 101.80. Ahmad says, sorry, can you repeat that again? Ahmad, I'm gonna drop kick your ass. I'm telling you. Okay, 101.80. 101.80 right here. All right, resistance at this point. There's so many resistance levels we need to get through to actually turn this thing. First one today is going to be here, 102.60. Okay, that's going to be important for today. Whoops. 102.60. Then, whoops, that's not what I wanted. I mean, yesterday's spike up to 103.40, obviously, but hell, we might even try to set up a little inverted head and shoulder pattern here. I don't know. Let's see here. I'll write 102.60 and then 103.30, but I really doubt we get up there today. We'd have to have some pretty damn good data to get up there. I just don't really see it. I don't see us getting all the way back up here today. I may be wrong, but I just don't see it. All right. Damn, I'm running short on time. Let me crank out the Canadian really quick. So the dollar Canadian, because crude's been a little bullish, you know, dollar Canadian's having a tough time at 132.50. The reason why 132.50 is so big, if you look at the daily chart, it's right here. 132.50 is huge. Okay. Support right now, 131.20. I think this is more important than this, believe it or not. Okay. So, because see that flag? It's the base of the flag. So 131.20, 132.50. 131.20. That's going to be really key. Also, whoops, 132.50. This is also extremely important. If we break out from there, there's not going to be a lot that can stop the dollar Canadian at that point. It's going to squeeze the crap out of the market. We are turning bullish. Remember, the thing is we held this multi-year trend line here, and we've been pretty much about ready to squeeze the hell out of the market. If we can break above 101, if we can break above 102, 132.50, it's going to start squeezing like it's nobody's business. All right, guys, I'll be back in a few moments. Don't go anywhere. When I come back, we will continue on with the analysis. We got, you know, obviously several more to do before the data. So thank you all for your patience today, especially with my internet issue. I'll be back in a few moments. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Now, hold on. Ron says, now, Blake, a very good salesman once told me that if you want to get a point across to someone, you tell them once, then you tell them a second time, and then you tell them a third time. Not at all at once, but over the conversation. So saying something 3 times should be good, Blake. I'm not selling anything. That's the point. If I was trying to sell you something, I'd say, yes, Ron, you should be a Wise Trade member. And also, while doing the analysis of the New Zealand dollar, you should also be a Wise Trade member. And as we're doing analysis of the New Zealand dollar, oh yeah, we should also be a Wise Trade member, because then you would have gotten that analysis before. But that's not it. I'm not trying to sell you anything. I'm just trying to give you analysis. So I don't want to do it over and over and over again when I got many, many currency pairs to go through. Difference. If I was selling, yeah, that's a different story. And I totally agree with you in that respect. All right. Now, let's get on with the analysis. All right. That's Cal Lem in our chat room. Let's go over to the Kiwi, speaking of the Kiwi. So the Kiwi has bounced. Let's see here. We're bouncing a little bit. Now remember, major resistance comes up at above 73 at 73.15. We wrote down 73 yesterday, but like I mentioned to you yesterday, we can get up to 73.10 because that's the underside of that trend line. Well, guess what? The underside of that trend line is an upsloping trend line, so we could actually get up to 103.15 today. That would be major, major resistance. GDP numbers out of New Zealand were a little weaker overnight. That had the Kiwi down here towards in the 40s. We bounced all through Europe as risk appetites got improved a little bit, but keeping in mind that a move up here would be viewed as a selling opportunity. So if you can get the Kiwi up here, probably be a really nice, really nice short. Okay, let's go over to the Aussie. And did I put that as range bound? Oh, whoops, shoot. Where's support? I'm sorry, I didn't even get where support is. Support's going to be 72.30, and that's major. Is major support. All right, and we are in a we're turning bearish. That's right, because we've broken through here in our channel. We've broken below this trend line, so we're bearish as we're going to be pushing back towards the middle of the range. Aussie. Now the Aussie is holding, and remember, we are at resistance right now. We're actually at resistance right now. This resistance is at we wrote down 74.85 yesterday. I guess what we can do is we can just really write it at 75 cents through the wicks there. Okay, 75 cents is going to be key resistance. We're in a range, but remember, really key support comes in at 74.15. Now, if you don't know why that's key support, 74.15 is right here. Right there. There's the horizontal support, a lot of horizontal support. This is really critical. Okay, right through here. Dollar index. So the dollar index, very similar to the euro, to the Swissy. I mean, we know right now how critical this resistance is right here. Okay, that's at 95.65. Support is going to be very critical at 95, maybe even a little lower. 94.80. Okay, very critical support and resistance. Where it's very choppy because we're in this apex of this triangle. I'd like to believe that we're going to break out ahead of the FOMC next week, but there's a good chance that we won't. And so the dollar has scope to move down. Okay, so. $94.85, 95, what is it? 95.65. Since we're closer to that resistance, I'm going to put that as major because we're closer to that. We are in a range. U.S. dollar Mexican peso. Now we have to watch risk appetite here. This is what is most important. Right now we've hit 161% extension. We've set up a reversal candle. It's you know, as you guys know, it's very early in the session. It's an 88% retracement. So that means 1930. What's the high today? 1939. And 1950 resistance. We are in a range. We happen to be at the upper end of our range. Obviously, if you guys want to short the peso, you know what your risk is right now. But again, if risk aversion picks up, we can be right at these highs, if not higher. You know, it's been dangerous trying to stand in front of this peso. You know, right when you think it looks bearish, it rips right back up on you. So be real careful, especially if risk aversion picks up. Now, support isn't for a long time. I mean, if we get a good reversal here, I mean, we're coming on a support. There's support at 1918, more support at 1892. So 18.92, 19. What was I gonna say? 19.8. Okay. Okay. Let's take a look at the Nordic currencies. Here's the U.S. dollar, Norwegian krona, struggling on a move to. This is a big resistance. We broke that down yesterday. It's huge. 829. 8.29. It's a 618. Support right now, maybe 820. Trying to cruise to this analysis so I can give you guys answer some more of your questions before it's time for data. Okay. But I gotta stop at a stretch. Oh. I feel like I've been up forever already. Which I've already been up for 2.5 hours. And it's 5 o'clock in the morning. It's really can't be good. Okay, here's the Swedish krona, still bouncing around, same levels we talked about yesterday. $8.54, $8.46, $8.46, $8.4, and we are in a range. Okay. Whew. Your bias chart's done. It's finished. It is finished. All right. So, now what do we do?